My name is Andrew Stotts of the Valuation Master Class, and today we're going to have another presentation by one of our graduating students. And this is on Tesla. Very interested to hear the recommendation, buy or sell, and what is the logic that goes into it. If you want to build a competitive advantage in company valuation, make sure to join us at valuationmasterclass.com. All right. Priyanshu, how are you?
I'm doing great. How are you?
I'm good. I know you've been doing a lot of work to prepare for this, so
Sure.
it's going to be exciting, and I'm looking forward to hearing you. So now is the time to just relax. Let me share the screen to get your presentation up there, and I think we're ready. So I'm going to leave the chat in just a second, and then you just take over from there. Okay?
Fine.
Okay. Here I'm going out. Good luck.
So, hello everyone. I'm here to present my recommendation on Tesla, a company with growth potential but overvalued at the moment. I initiate coverage on Tesla with a sell recommendation based on target price of $193.9, implying a downside of 22.2%. I derive my target price from a DCF based valuation using a WACC of 8.4% and a terminal growth rate of 5%. Here are the recent highlights of the company. Short term pressures, but energy storage and AI expansion can be the growth catalyst. Cost cutting initiatives in manufacturing to improve margins and long term profitability, and targeting new markets to fuel next wave of global expansion. Following are the associated risks with the company, the supply chain and raw material uncertainties, battery cell production and supply constraints, production risk from gigafactory expansion, and high dependence on full self-driving success and potential regulatory hurdles. Now, at the right, you can have a look at the gigafactory of the Tesla, a bit about the background of the company. In 2003, Tesla was founded by a group of engineers with the aim of accelerating the world's transition to sustainable energy. In 2010, it went public. Tesla operates in two reportable segments: automotive and energy generation and storage. It became the world's largest EV manufacturer by 2001 with a significant market share in key regions such as North America and Europe. As of second quarter of 24, Tesla's market share in the US EV market has fallen to 49.7%, a significant drop from the previous years when it held 60% in first quarter of 23 and 79% in 2020. Now coming to the highlights about the company, future hinges on fruition of key plans. So the first story is about the short-term pressures, but energy storage and AI expansion can be the growth catalyst. Tesla is experiencing short-term pressures with automotive revenues declining to 11% in 6 months ended June 24 as compared to June 23, primarily due to lower average selling price and decrease in deliveries due to early phase of production ramp. However, the company is positioning itself for long-term growth through investments in its energy generation and especially storage business, which has capacity to grow significantly while producing high margins. Also, Tesla's massive investment in AI and automation, with spending on AI infra growing to $2.3 billion in 2024, will enable further advancements in autonomous driving and operational efficiency, while its subscription based services like full self driving software and supercharging networks represent new high margin revenue streams. Second story is about cost cutting initiatives in manufacturing to improve margins and long term profitability. Tesla is reducing production cost in its automotive segment, with cost of sales decreasing $1.5 billion in first quarter of 24. Tesla's cost reduction efforts and additional localized procurement and manufacturing allowed it to competitively price vehicles. Its next phase of growth will depend on its ability to add to available sources of battery cell supply by manufacturing its own cells that it's developing to have high volume output, lower production cost, and longer range. Third story is about Tesla targeting new markets to fuel next wave of global expansion. Tesla is aggressively targeting new markets like India, Southeast Asia, and Latin America to drive global growth. In India, Tesla is exploring setting up gigafactory, leveraging government incentives for clean transportation. In Indonesia, Tesla aims to secure nickel supplies for batteries and serve the growing Southeast Asian market, while plans for a gigafactory in Mexico will reduce manufacturing costs through proximity to key supply chains. Now, looking at the quarterly data, the first quarter of 24 saw a big drop in EBIT margin. The company saw a 1% year-on-year increase in gross margin and a year-on-year decrease in EBIT margin of 7.2%. Now, a look at the recent news snippets. Yesterday, Tesla announced its quarter delivery results. Tesla's quarter deliveries disappoint ahead of robotaxi unveiling. Coming to the constraints of growth, the Tesla's constraints to growth seems neutral. For capital, Tesla is ramping production and constructing new gigafactories around the world, requiring significant capex. But historically, its cash flow from operations has always been more than its capex. You can have a look at the first chart on your right hand side. Given its strong capital structure, low debt, and sufficient cash, I do not see access to capital as a constraint. For operations, Tesla is dependent on mainly two products, Model 3 and Y. Additionally, it operates a direct sales model without traditional dealership. Also, Tesla's supply chain is vulnerable due to reliance on critical components and raw materials from limited suppliers. Thus, it seems to be a major constraint. For market, the constraint seems neutral. As of 23, EVs accounted for approximately 18% of all new cars sold, with Tesla leading globally. But its market share was closely followed by BYD. The majority of these sales are concentrated in three markets: China, Europe, and United States, which together accounted for 95% of global EV sales. You can have a look at the second chart on your right hand side, which shows the rise in percent of cars sold that are EVs in the last 3 years. For people, the constraint seems neutral. With over 140,000 employees, it faces competition in attracting employees, especially in higher specialized fields such as software engineering, battery technology, and AI. Moving to the revenue distribution, 85% of its revenue came from its automotive segment, 6% revenue came from energy generation and storage segment, which includes the design, manufacture, installation, sales, and leasing of storage, energy generation, and energy storage products. Tesla generated a revenue of around $97 billion in 2023. As of geographically, you can look at the pie chart on the right hand side. As of geographically, 47% of its revenue came from US, while 22% from China and 31% from other internationals. Now, a look at the FVMR. Tesla ranks in bottom 10% among 1,800 non-financial companies in USA regarding fundamentals, valuation momentum, and risk. For fundamentals, it's ranked in top 40% due to good recurring net margins. For valuation, it's ranked in bottom 30%. For momentum, it seems neutral. And for risk, though the balance sheet risk seems low, due to Tesla being net cash, the extreme volatility with 3-month beta of 3 makes it quite risky. Now look at the Porter's 5 forces. It scores overall 68%. For rivalry among competitors, it scores 87%, as the automotive market is highly competitive, with several established traditional automakers and new entrants focused exclusively on EVs and hybrids. Although it's not a slow growth industry, and Tesla thrives on tech disruptions and innovation. For bargaining power versus suppliers, it scores 53%, as some critical components like lithium ion batteries, semiconductors are sourced from limited suppliers, and switching suppliers can be extremely challenging due to the specialized nature of labor and parts. For bargaining power versus customers, it scores 53%, as customers have multiple alternatives, especially with many automakers recently entering the EV market. Also, many of these customers are price sensitive, especially as more affordable EVs enter. For threat to new entry, it scores 87%, as entering the EV industry requires significant capital, technology, and specialized labor force. Plus, it also has various regulatory hurdles. These high barriers protect existing players. For threat of substitutes, it scored 60%, as consumers switching costs are relatively low, as customers can easily choose other EVs or traditional vehicles. Now, a look at the leadership. The chairman is Robin Delhone and CEO is Elon Musk. A recent SEC filing revealed Elon Musk's ownership in the company to be around 20.5% and total institutional ownership around 45%. Now, for the world-class benchmarking, profitable growth consistently ranked in top 20% among 870 large consumer discretionary companies globally from 2021. Profitability has ranked in top 10% for 2022, but recently growth fell to number 6 from number 2, continuing the downward trend since 2022. Asset efficiency has ranked number 6 in past 12 months, and revenue growth has ranked below average in past 12 months, coming down to number 7 from number 2 in 2023. Here are the breakdowns. Now, coming to the ESG score, overall it scored 73%. For environment, it scored 60%. For social, 100, and for governance, 60%. Now, here are my forecast for the PNL. So, net profit, I expect it to dip in 2024 as the first two quarters saw decline in growth, and then I expect a decent rise in the coming years. For the net fixed assets, I estimate it to grow as there is an increase in the capex. You can see right here. Although the company says that it expects the capex to be in the range of around 8 to 10 billion dollars for the next 2 3 years, I expect to be more than that, as it can face regulatory and safety concerns regarding the FSD drive and robotaxis. So here are the look at the current ratio. It seems to be improving and in a quite good state. For debt to equity, it's negligible as the company is net cash. Now for the profit margin, I expect it to decline in the next year and improve slightly in the coming years. And the same trend is followed for ROE. Now look at the relative valuation. On the forward, 25 PB multiple, Tesla looks expensive compared to the consumer discretionary sector in the US. I forecast its ROE to be around 19% in 25, higher than the sector average in Asia and global average, but still lower than the US sector average. For 20 forward-looking 2025 PE multiple, Tesla trades at a significant premium to the consumer discretionary sector in the US, Asia, and world. For EPS growth to be positive again in 25 after an expected negative EPS in 2024. So looking at 2025 PEG ratio, Tesla trades at premium. Now look at the valuation and target prices. I assumed a risk-free rate of 2% and a market equity risk of 6%. Tesla has been a high beta stock, so I assume a beta of 1.25 times. I forecast a capital structure with around 20% debt to total capital. This results in a WACC and discount rate of 8.4%. I use a high terminal growth of 5% and free cash flow to firm to value Tesla. On a base case scenario, I anticipate sales growth of 20% until 2028, leading to a value of $193.9 per share based on the FCFF methodology. This represents a 22.2% downside compared to the current market price. Here's a look at the sensitivity analysis. Now coming to the risk. So the main risks are supply vulnerabilities and regulations. So first, the supply chain and raw material uncertainties. Tesla has heavy reliance on raw materials like nickel, essential for EV batteries, presenting a significant risk. Any disruptions in these supply chains could delay production and increase cost. For battery cell production and supply constraints, Tesla's ability to scale production is closely tied to battery cell availability. While Tesla is developing its own battery cells, the process is complex and delays in achieving high volume output could hinder growth. For high dependence on full self-driving success and potential regulatory hurdles, if FSD capabilities fail to deliver on the potential or face regulatory hurdles, Tesla's anticipated high margin revenue streams from autonomous driving could be delayed, impacting future profitability. So, to conclude it, Tesla seems to be a high growth potential company but overvalued at the moment. So, I have a sell recommendation.
Great. All right. Well done. Now let's go through some questions.
Yeah.
I want to go to the ratio page. Let's look at the net margin of the company.
Ratio.
There, just go down one.
Yeah.
Okay. So net margin goes from 10.3, 15, 15.5 down to 5 and 5.8.
Yeah.
So that's showing the hit that they're taking.
Yeah. Last 2 quarters were drastically
Yeah.
bad.
And if we look above that, we can see, December, March, June revenue growth was very tiny.
Yeah.
Um, so, but your forecast for they've already done, let's say 6% average net margin in the first half. Your forecast is 11.6. So you're expecting that they're basically able to ramp up their sales
In
and
last.
ramp up their profits in the second half of the year.
Yeah. Yesterday only its third quarter report came. It increased to 6%, 6.4% around quarter deliveries, but still not beating the expectation. There will be pressures on the fourth quarter also.
Yeah, which it seems like you're a little bit optimistic on your full year if third quarter now just came in there. So you would probably have to downgrade a little bit related to that, I would assume. But then let's talk about 2025. How comfortable are you with that 11.8% net margin?
So my reasons for it, Tesla is excessively reducing its prices to take a part of a big chunk of the market share, and also China's policies which are helping it in the EV segment. And lastly, in last 2 quarters, it lost majorly because of its lower pricing, and there was this decrease of approximately 40,000 deliveries of Model 3 and Y combined in last 6 months due to early phase production ramp of updated Model 3 and factory shutdowns. So I think those will not be faced in the coming years.
Okay. And Prow Superwan says, based on your positive stories, why is the target price projected to be on the downside?
So I don't know what's happening with the market, because you can see I'm being too optimistic in nearly everything, because
Mm,
I really think the company is doing great in many sectors, like it's innovating constantly in auto taxis and FSD, and in humanoid robots also it's discussing. So I think it's quite optimistic. Still, it's on such a low side.
yeah,
The
it's
market is overestimating
and
it.
what do you think the market is pricing into it? Are they pricing some kind of big breakthrough by Elon Musk, or what do you think they're doing?
I think they are highly defending their opinions on FSD, like it will suddenly change the market or something. But there
Hmm.
are already players in robotaxis like Waymo of Google, it's already there, and China there's Baidu. So it's not like Tesla will just come and capture whole market in one instant. They are also testing and stuff. So
Right.
yeah, the rest we can know more about on 10th of October after it presents it.
So the share price of Tesla is pretty volatile. So this question that we got from Zishan is kind of interesting, and that is, what would be the one thing that could change your recommendation from sell to buy? Obviously, share price comes down a lot. That's one thing. But is there any other fundamental factor that you're like, whoa, that's super good news?
Yeah, so Tesla is innovating in two, three things, and for me, it would be FSD. If it succeed in capturing a major market share in 5 years down the line, my valuation will change, and also its innovation with humanoid robots, Tesla bots, in 3 to 4 years. If uh, I see any further enhancement in that technology, my valuation can change.
So how does it feel to graduate from the Valuation Master Class?
Oh, it feels great. It's such a hard work, so tiring and so extensive. But as you said on the first day, I think that I challenge you to complete it. So yeah, I stick to it, and it's hard, but I feel great.
You remember when I told the story of how I was in university and the
Yeah,
professor said 100 of you will be gone by the end of the semester and only 10 of you will get A's of the remaining 100. And I was like, I'm going to survive.
yeah, you challenge us the same way.
How many hours do you think that you spent on Valuation Masterclass from beginning to end?
I don't even have a count of it, but it would be in the range of 300 to 400 at least.
Yeah. Yeah. It's amazing. And when did you start working on your Tesla report?
So it was for valuation, it was weeks ago, and report 1 week ago. Uh,
And part of what you're seeing is the way I do research, which is I have a lot of structure. I have a standardized report. I have the model, the value model. Um, can you, what have you learned about, efficiency in the way that you do research?
So what I think is just you can never be confident about the forecast. You can never be confident. You will always think that you know something less, something is missing. You will never be confident about it. But it's just what you think it's going to happen. Whatever you learn from from your research about market, about the company, you have to stick to it. And structure helps in that. Like we were given just small things, first do this, first do this. The structure helped us to accumulate that knowledge throughout the research. So,
Yeah. In fact, we just keep getting more and more structure into the Valuation Masterclass bootcamp in particular. In this particular boot camp, what we rolled out is every single Monday, I've recorded a very long video explaining exactly how to do the assignment and what is a good example, what is a bad example. We've created cheat sheets. It's incredible improvement that we've already done.
uh,
So it's going
that's
to be
great.
easier for the next generation.
Yeah.
And on the first day of the Valuation Masterclass bootcamp, I said the Valuation Masterclass is about transformation, not information. What
Yeah.
would you describe as the number one transformation that you went through in the last 12 weeks?
My biggest weakness was I am a perfectionist. So I was chasing, no, I am not confident with this. I am not confident with this. So the transformation that I had gone through is you don't have to be a perfectionist. You just have to be confident in yourself and try to know as much and present it as it is. So that's my biggest transformation, that don't be a perfectionist every time.
Yeah, that's a great point. And what is your plan for the future for yourself and your future career and all that?
Future, my goals change very often, but at the moment I think I would be going towards finance. Like after doing this internship, I am quite sure about that. And
Mm,
probably towards fund manager side. I love that
yeah,
portfolio and stuff. So,
that's exciting. Well, congratulations, and I will see you in the Slack channel, and we'll continue our conversation there.
thank you so much.
Yep. Wow. That was a second presentation on Tesla, and it was a great one also. It's amazing about the amount of hours and the amount of time that students are putting in Evaluation Masterclass to build a competitive advantage. And I like what Priyanshu said about the idea that if you're being held back by being a perfectionist, you've got to understand nobody's going to get it right. In fact, I say you are always wrong. And once you understand that you are always wrong, you're never going to have the perfect outcome when it comes to valuation because value is subjective. So just get off the fence, go out with what you've got, support it with good evidence, and that's how you do research. If you want to build a competitive advantage in company valuation, just join us at Valuation